It is 8:36 a.m. Pacific Standard Time. It's the 6th day of March 2026, and this is episode 1272 of Bitcoin and Strike in New York, which means that they got a bit license. You're going to hear about all that and more this morning on Bitcoin and. It's all the news that you can use with me, your host, David Bennett. I'm going to tell you about Bitcoin and macro from around the world. And there's a lot of crap going on around the world right now. Dude, oil is just punching its way to $100 oil. I honestly did not think that it was going to do that, but it is doing that. And I'm noticing a pattern. It's probably a very short-term pattern, but Bitcoin is the antithesis of oil regarding price. I've been noticing yes, I know I'm watching the charts. Nobody should actually watch the charts. It's not good for mental health, but I was like, well, I wonder. And my suspicions have been, I don't know, kind of confirmed. On an hour chart, if you look at the price of oil as it goes up, the price of Bitcoin comes down until oil stops trading. Right. And then, let me take that back. Oil never stops trading, but it kind of levels out after there's sort of like a flurry of trading activity. And then oil will just kind of hang out for a few hours. During that few hours, Bitcoin seems to just do whatever it is that Bitcoin does. It seems disconnected. But during the trading hours in the United States, like the main market trading hours, the Bitcoin price goes red, or it doesn't go red. It starts dropping as oil starts rising. And then when oil comes back down, I see Bitcoin start rising back up. This is a behavior I've never seen before. And I think it really kind of connects us to how markets connect themselves to other markets, given a certain geopolitical context. And in this context, we're talking about the Middle East, Iran, bombs being dropped on brown people, the whole ball of wax, except that now it's happening. Well, it's always happening, but again, it's happening in very oil-rich, oil-connected countries. This time, the Strait of Hormuz is involved, and since a fifth of oil flows through that thing, we're really seeing some pressure, upwards pressure on the price of oil. And that, as usual, going to make things cost more. It's going to look like inflation. The Federal Reserve is not going to drop rates because of it, and therefore risk assets get hurt. And until Bitcoin, the only decoupling that Bitcoin really needs to do, the way that we need to go out there and tell the world what Bitcoin is to get it to decouple, not from this S&P, not from markets, not from oil, but from its view as being a risk-on asset. If we can get people to understand, or somehow or another, and can we do this? I don't know. Maybe one of these days, if we all work really, really hard for a long time, get people to understand this isn't a risk asset. It's more like how people think. This should actually be how people think about their own house. They don't think of their house as a risk asset. That hasn't actually been true for a long time. It's actually more true given housing prices right now than it ever has been, but nobody really ever looks at their house as a risk asset. If we can get that to happen, then we finally get Bitcoin free. So that should, hopefully you'll think about that every once in a while when you're talking to somebody and they're like, I don't know, it's risky. It's not a risk asset, and tell them why. Okay. So we're going to talk about Strike, Tether. We got some exchange news going on. Vancouver wants to shoot themselves in the head. Canada's always committing suicide in one way, shape, form, fashion, or another. Pakistan's online. Solo Satoshi has got a new rig out. And the IRS has a proposal. I love their proposals. But we are first going to begin with Strike, securing a New York bit license, opening Bitcoin financial services to state residents. Micah Zimmerman Bitcoin Magazine. I think he's one of the only people left writing for Bitcoin Magazine. I'm getting a little nervous about what's going to happen to Bitcoin Magazine, but I can't do nothing about it. So Strike, a Bitcoin financial services firm founded by Jack Mallers, has received both a bit license and a money transmitter license from the state of New York's Department of Financial Services, allowing the company to operate in one of the most tightly regulated digital asset markets in the United States. And that probably also means the world, except maybe for China. But the approval allows Strike to offer its Bitcoin brokerages, payments, and custody services to individuals and businesses across New York. The state's regulatory framework requires firms to meet standards for capital reserves, cybersecurity, and operational transparency. New York's bit license regime has long served as a gatekeeper for digital asset companies seeking access to the state's financial markets, and several crypto firms have opted not to pursue the license because of the compliance requirements and ongoing regulatory oversight. Mallers described the license as a major step in the company's effort to build a Bitcoin-focused financial platform. Quote, receiving our bit license is a defining milestone for Strike. Strike is building the leading Bitcoin financial institution. With our bit license, we can now bring that mission to New York, the global center of finance, Mallers said in a statement. And I appreciate Jack Mallers for not going all suit speaky on me. With the approval, New York users will gain access to Strike's suite of Bitcoin services. The platform allows customers to buy and sell Bitcoin through linked bank accounts, debit cards, or wire transfers. Users can also directly deposit their paychecks and convert a portion of all their wages into Bitcoin. The platform includes automated trading tools like recurring purchases and price-triggered orders. Recurring buys allow customers to schedule Bitcoin purchases on a set interval. Target orders execute trades when Bitcoin's price reaches a specific point. Strike also allows users to pay bills from the Bitcoin balance, including utility payments, credit card balances, and mortgage bills. Ooh, nice. The feature reflects the company's effort to position Bitcoin as a tool for daily financial activity rather than only as an investment asset. And according to the company, customer Bitcoin and cash balances are held one-to-one and are not lent out or used for company operations. Strike said users can withdraw Bitcoin to personal wallets at no cost, with the firm covering on-chain transaction fees. The license also places Strike under the supervision, oh thank God, of the New York State Department of Financial Services, which requires periodic audits, cybersecurity reviews, and capital reserve requirements. Strike's expansion into New York comes as the company outlines broader growth plans for its platform. Mallers said in 2025 that the firm intends to add Bitcoin-backed lending, which would allow customers to borrow fiat currency while holding their Bitcoin. The real news that was not mentioned here is just how hard it is to get a bit license. I hate the bit license. When that thing first dropped, you saw the first day or the first week after it dropped, what you saw was all these Bitcoin companies and honestly crypto companies reviewing the requirements of the bit license. And after a week of review, it became very clear to 80% of all the companies operating inside the state of New York that they needed to get out. They didn't want to have any part of this, and it wasn't on moral or ethical grounds. It was almost going to be impossible for the smaller companies to secure a bit license. And they were like, fuck you. We're gone, dude. We'll go to Texas. We'll go to wherever it is that it's easy to operate. Strike receiving this bit license shows a couple of things. One, there's not very many other places in the United States that Strike isn't already available. And two, that they're big enough and have enough lawyers to be able to navigate that regulatory hellscape that is the New York State bit license. So kudos to Jack. I hope he does well with it. On to Tether, who has invested in UTXO, a startup enabling USDT settlement on top of Bitcoin. RT Watson writing for The Block. Tether, the world's largest stablecoin issuer, has led a $7.5 million round in UTXO, a startup that enables USDT settlement on Bitcoin. Quote, Bitcoin has always been central to Tether's long-term vision for USDT, but turning that idea into reality required infrastructure that didn't yet exist. UTXO was founded to build that solution and enable Bitcoin native stablecoin settlement with robust, production-ready payment rails. UTXO and Tether wrote in a co-statement on Friday. With a supply of $184 billion, USDT is the world's most popular United States dollar-pegged stablecoin. Let's pause to correct this. It's the most popular stablecoin, period. And all USD-pegged stablecoins are all the most popular stablecoins when you look at any other stablecoin. Whenever it is that those morons in Europe, and I'm not talking about the citizenry, I'm talking about the heads of state, whenever those morons finally release their stablecoin that's pegged to the euro, it's not going to be popular. They'll say it is, but it's not going to be all that used, not compared to USD pegged stablecoins. Tether is top dog. They just are. You don't have to love them, and you don't have to hate them, and you don't even have to be neutral. You don't have to think about them at all, in fact. It's just the case that they are literally the most used stablecoin in the world, not just the United States. Just let's be clear about that. UTXO's technology allows USDT transactions to be settled directly on the Bitcoin network, which includes making it possible for the stablecoin to be used over the Lightning Network. Payments carry fixed fees that are revealed beforehand, the company said. Transactions are settled atomically and privately while benefiting from security tied to Bitcoin's network. Settlement costs are paid in USDT. Quote, Bitcoin has always been central to Tether's long-term vision for USDT, said Tether CEO Paolo Ardoino. By enabling native Tether settlement directly over Bitcoin in the Lightning Network with predictable costs and seamless integration, it strengthens Bitcoin's position as a global settlement rail for real-world dollar transactions, end quote. Massively profitable, Tether's investment arm has become a prolific investor in a variety of industries. The firm has also made investments in companies that provide technology that support or bolster its stablecoin business, and last month, Tether invested in Layer Zero Labs, which owns technology being used to create USDTO, the omni-chain version of USDT. Earlier this week, Tether invested in the sleep technology startup 8Sleep at a $1.5 billion valuation. Dude, Tether's all over the fucking place. They invested in agriculture in, El Salvador. They're into mining. Now they're into what? Sleep technology? It seems that they're kind of all over the place. But this is going to piss people straight off. And here's why. People will say, and rightly so, because I still consider stablecoins as unnecessary because they're going to inflate just like whatever fiat currency they're tied to is going to inflate. So I don't see it as savings technology. But it's not going away either, right? So Paolo Ardoino's always been a big proponent for Bitcoin. And he was before Tether even existed. And now he keeps coming back to Bitcoin. And it's going to piss people off because they're going to look at these transactions directly on the Bitcoin blockchain as spam. And it will be people like, I don't know, Luke Dash Jr. might have a problem with this. He might want to filter those transactions because they're not real Bitcoin transactions. You see where I'm going with this? This BIP 110 business. I mean, because Tether is going to be able to settle or somehow utilize, and it's not clear exactly how, but they are speaking directly about the Bitcoin network itself. That means the time chain. And they're going to somehow or another lock into that their Tether transactions. Now, they want security. That's what they're getting out of this. and that enables them to use the Lightning Network. And all that shit is still a sidecar business on top of Bitcoin's blockchain, just like all those pedophilia pictures that people keep crying about. So is this pedophilia? Oh my God, Paolo Ardoino, you're a pedophile because you want this kind of transaction on the blockchain and you're going to make it to where you respect all the consensus rules and somehow that makes you a bad person. Now, again, I don't like NFTs. I think Ethereum rocks on the Bitcoin blockchain is an affront. It's insulting. But the problem is that they're valid transactions under the consensus rules of Bitcoin. And when we start looking at everything as you don't support BIP 110, therefore you're for pedophilia, it doesn't make sense to me at all. I get really confused because I'm looking at these Tether transactions that are going to be incoming, and I'm like, this actually may be good for Bitcoin. It's not that I want it. It's not that I'm drooling for it, but I'm not just going to immediately hate it. There was a lot of people that hated the thought of the Lightning Network. I use Lightning every day now, and I have no problems with it. So let's kind of be careful. This actually could be a good thing for Bitcoin. Well, again, it's always we'll have to wait and see thing, but I think I just wanted to put this in here because this pedophilia argument doesn't hold any water. And if for whatever reason you see those arguments, just stay away from them. It's going to be a worthless engagement for you. I promise it will be. All right. Binance tells the Senate that no accounts sent crypto directly to Iran. This is CoinDesk. Sam Reynolds is writing this one. Binance, via its lawyers, told a U.S. Senate investigation that it found no evidence that accounts on its platform transacted directly with Iranian entities, refuting allegations that $1.7 billion in crypto flowed through the exchange to Iran-linked groups in a March 6th letter responding to inquiries from Senator Richard Blumenthal's Permanent Subcommittee of Investigations. The largest crypto exchange said an internal review found only indirect exposure to wallets that may have had links to Iran and that accounts tied to the activity were removed. Binance also attacked the media coverage that prompted the probe, calling reporting by outlets, including the New York Times, Wall Street Journal, and Fortune, demonstrably false and defamatory in several material respects. Ooh, defamatory. It sounds like a lawsuit incoming. The response comes after Blumenthal opened an inquiry into whether the exchange allowed funds to move to Iran-linked organizations, including Yemen's Houthi militants. The investigation followed media reports that internal Binance investigators had identified transactions tied to Iranian entities. Binance said its review began after law enforcement contacted the company last April seeking information about transactions between Binance wallets and several external addresses that authorities said could be connected to terrorist financing. According to the letter, the exchange provided user records and transaction information to investigators and continued examining the internal activity. The exchange's lawyers said Binance identified two entities, Hexawhale and Blessed Trust, whose accounts had interacted with the flagged wallets. Binance said that it removed Hexawhale from its platform in the following August and off-boarded Blessed Trust in January after completing the investigations. Off-boarded. They off-boarded them. Sounds like a torture device. Binance also disputed reports that compliance investigators were dismissed after raising concerns, saying most departures were voluntary and that one employee was terminated for violating company policy on disclosing internal user information. Quote, when there is credible risk information, Binance investigates, mitigates, off-boards accounts, and reports to appropriate authorities. Binance has a rigorous compliance program that is consistently growing stronger, the letter said. Okay. Still, though, this is an internal investigation. The only way that they will ever be able to put this to bed is an external audit by a third party. That's just the only way that this works. And who knows if they'll even do it. So here's what's going to happen with Senator Blumenthal. He's not going to give a shit about this report. He's going to immediately say, and rightly so, and I would say the same thing if I was in his position, because he doesn't like crypto. He doesn't like Bitcoin. He doesn't like any of this stuff because it hurts his friends. So if I was him, I would immediately say, this is an internal report and it's clearly biased. I'm not going to enter this. This is not going to sway me or my committee's investigation into you. I'm sorry that you wasted your time on it, but try again. What Binance has to do is to go get an external audit on this security matter. And that audit is going to have to say, yeah, there's nothing here, dude. There's no there. If it says that, then Blumenthal's probably going to have to listen. But an internal investigation, dude, waste of time. But you know what's not a waste of time is Sats 4 Snacks at sats4snacks.com. That's sats4snacks.com. Sats, the number 4, snacks.com. That's where you're going to find all kinds of freeze-dried goodies like fruit, right? Well, actually, that's pretty much all it is fruit. It's you can get freeze-dried pineapple, freeze-dried peaches, mangoes, which happens to be my wife's favorite one. Let's see, what else he got? Oh, he's got freeze-dried bananas, and he's got freeze-dried strawberries, and he's also got comfrey salve. Now, this stuff is delicious. He sent me a care package. I've used all of this stuff. I've eaten all of this stuff. This is great food. It's completely not dehydrated fruit, which, in my opinion, loses minimum half of its flavor somehow in the drying process. But freeze-dried, it seems to me that retains 100% of the original flavor of the fruit that was dried. This stuff is perfect to throw into a backpack for a hike. Go to sats4snacks.com, sats4snacks.com, use the code Bitcoin and in the coupon code portion of the order form, and that way you'll get 2.1% off. Use Bitcoin and in the coupon code. It also tells Sats4Snacks that I made them a sale, and that helps me because this is the Circle P. It's where I bring plebs with goods and services. These plebs are just like you. And you're a pleb, and you may want to buy those goods and services, but if you do buy them, you're going to be buying them in Bitcoin, because if you're not selling in Bitcoin, you ain't in the Circle P. It's the way that we try to continuously form the Bitcoin circular economy. And the reason I do the Circle P is this. Sats4Snacks, Permanerd is the guy behind it, and Soap Miner, and any of the other vendors that I've got in my list, and I want to add more. They like doing a thing. They would like to actually be able to show somebody else that they've done a thing and get some feedback on that thing. They'd also like to be so damn good at it that people want to give them money, in this case, Bitcoin, for that thing. And then they want to be able to grow that. But a lot of times you can only really do that if you pay somebody money to advertise for you. I don't. I do not charge any of my vendors any advertising fees. I do ask them to cut me some Satoshis if I make them a sale, right? That's why we have coupon codes so that they know kind of where it came from. But there's no upfront, this is a handshake deal. There's no signed contract. He doesn't pay me some X amount of dollars a month for me to rattle off about his goods and services. I like his stuff. He makes good stuff. I think you'll like his stuff. So go to sats4snacks.com. Use code Bitcoin and on to Iran. Oh, goody. Iran's regime, crypto activity, topped $3 billion in illicit transactions. It surged in the year 2025. So before we started dropping bombs on these people, they were clearly doing illegal shit, right? Well, we'll find out from Jason Nelson, decrypt.co. Iran's use of cryptocurrency to move money under sanctions is expanding. with more than $3 billion tied to networks linked to the Islamic Revolutionary Guard Corps in 2025, according to blockchain analytics firm Chainalysis. The figure comes from the company's 2026 crypto crime report, which estimates that illicit cryptocurrency addresses received at least $154 billion in digital assets just last year. That's a 162% increase year over year. Quote, Iran continued integrating crypto into its strategic priorities and financing for proxies, even as the regime faced internal and external pressures not seen since the early days of the Islamic Republic, Chainalysis concluded. According to Chainalysis, in the fourth quarter of 2025, IRGC-linked addresses accounted for over half of all the value received by Iranian entities, moving more than $3 billion to support regional militia networks, facilitate oil sales, and procure dual-use equipment. And I don't know what that means. After last weekend's joint U.S. and Israeli airstrikes on the country, blockchain data showed about $10.3 million in cryptocurrency flowing out of Iranian exchanges, with hourly outflows briefly approaching $2 million as activity spiked. Bitcoin dropped to a price of $63,100 after initial reports of the bombings. Blah, blah, blah. Price action, price action, price action. According to Chainalysis, the total Iranian cryptocurrency market reached a value of $7.5 billion in 2025. However, recent fighting in the region has also affected the broader cryptocurrency market. Beyond the immediate market reaction, Chainalysis said the primary objective remains the sustained support of external operations in the region. Quote, these funds are used to finance a web of regional militia proxies, including Lebanese Hezbollah, Hamas, and the Houthis, facilitating the movement of commodities, illicit oil, and arms at scale not seen on the blockchain before, they said. Fuck you, Chainalysis. You're not helping. You're not helping. You're literally creating FUD from inside the Bitcoin, inside of the Bitcoin ecosystem. You're not, I mean, at this point, Chainalysis is just, they hate Bitcoin too. That is the only conclusion that I can come to. It's not that what they're saying isn't true. Yeah, there's Hezbollah in Lebanon. I get it. I guess that's why Beirut got bombed and we took out an oil refinery, which, did nothing but make it more expensive to ship shit. Hamas does exist. The Houthis are there. I get it. But what the fuck? Why on earth is Chainalysis making any kind of analysis on geopolitics? Dude, just track the wallets. Where, I don't even want you doing that, but now you're starting to pontificate out way outside of the mandate of the company that you are. And that is problematic, because it sounds to me like somebody inside that company was put there. I don't know who, but it just sounds like somebody's in that company and they really don't like Bitcoin. They really don't like crypto. So they're going to use Chainalysis to be an evil mouthpiece. And honestly, they just need to stop. Honestly, that's really all we need to know about that one. Let's run the numbers. We are going to run numbers, but first, there is geopolitical shit going on. And CoinDesk has an article that's going to, sort of kind of get us in to what the numbers we read might mean or how they're being affected, because there's no deal with Iran. That's a quote from Trump. He demands unconditional surrender, sending oil surging, Bitcoin and stocks lower. James Van Straten is writing this one for CoinDesk. Risk markets are taking a beating on Friday morning after U.S. President Donald Trump seemingly quashed any chance of some sort of negotiated settlement with Iran. Quote, there will be no deal with Iran except unconditional surrender, said the president in a Truth Social post. The news sent West Texas Intermediate crude oil to a multi-year high, and in turn sent NASDAQ futures a lot lower. And it also hit crypto prices as well, pushing Bitcoin to session lows, down 5% to 68,800. Actually, I think it's more like 68,300 or 200 right now. U.S. payrolls unexpectedly declined by 92,000 jobs in February, highlighting a cooling U.S. labor market, just as rising oil prices and geopolitical tensions complicate the Federal Reserve's outlook. God, I would hate to be Jerome Powell right now. The unemployment rate also ticked higher from 4.4% to 4.3% the previous month. The weak report reinforces a broader slowdown in hiring that has been building over the past year. Quote, let me put this another way. The U.S. economy has lost jobs since April 2025, economist Heather Long wrote on X. Quote, total job gains from May 2025 to February 2026 are now negative 19,000. Companies are not hiring in the face of all these headwinds and uncertainties, end quote. Normally, data like this would have the Federal Reserve busily cutting rates, but the central bank continues to face inflation that remains above its 2% target, and the sharp rise in oil threatens to worsen the price outlook. For the moment, interest rate traders continue to bet on very little chance for an imminent rate cut, and the odds of a March cut are just 4%, and an April cut, only 17% odds that they will actually cut the Federal Reserve rate. And yes, I know I've gotten a lot of flack about, again, maybe stepping out of my own lane, but no, I can say the following. If Trump wants to win the midterm elections, he's got to do something other than what he's doing. This is not helping people want to vote for Trump. He's got to figure out a way to completely eradicate what the hell ever is going on in Iran that he doesn't like and set the stock market on fire. That's the only real way that midterms are going to work in his favor. Otherwise, he either doesn't give a shit or people are telling him the wrong information. It's just that easy. Okay, so here are the numbers. Brent North Sea up 8 1/3 points. Jesus. $92.54 a barrel. West Texas Intermediate is up double digits, 11.46 points in the green to $90.34 a barrel. Natural gas up 6% to $3.18 per thousand cubic feet. Gasoline well over a point to $2.70 a gallon, and Murban crude is up 6 1/3 to hit exactly $100. We now have technically $100 oil. Good God. Metals are screaming, except for palladium. It's in the green, but moving sideways. Gold is up 1 1/3 to $5,149 3 dimes. Platinum is up 0.15. Silver is up 2.5 to 84.23. Copper is moving sideways also, but also in the green. Ag is mostly green as well. Biggest winner today is chocolate. 6% to the upside. Wow, swinging for the fences. And the biggest loser is lumber, 0.71% to the downside. That's not surprising given rising oil prices. Live cattle down 0.65%. Lean hogs up 0.5%. Feeder cattle down 1.14%. S&P is down 1%. NASDAQ is lower by 0.72%, and the Dow is down 1.18%. That is 568 points to the downside for that one. S&P is down well over 2 full percentage points. $68,540 gives us a $1.37 trillion market cap. We can only purchase 13.3 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,998,541.78 of. Average fees per block are nominal, 0.02 BTC, taken in fees on a per block basis. 30 blocks carrying 32,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Lows are 1. Hash rate is 1.03 zettahashes per second, so still in zettahash territory for the defense of Bitcoin. That's what the hash rate really means. How much power is securing the Bitcoin network? And by God, there's a lot of it. Now, from Poly Corruption, yesterday's episode of Bitcoin, and Jason High with 250 sats says, I'm sorry for your loss. God bless. Thanks, Jason. I appreciate that. Nick Dose 164 says, cheers. Pies with 121 sats says, thank you, sir. No, thank you. Noster Gang with 100 sats says, nothing. Sycros with 100 sats says, Citizens United was a court case. A court case, not legislation, and it didn't grant corporations personhood. I don't know, man. They had that for as long as there's been formal incorporation. Rather, it affirmed their right to use spending on political messaging as First Amendment protected free speech. Okay, I see what you're saying. Thank you for the correction. I do appreciate I appreciate it when people who know more than I do about something tells me what it is. We can all learn together. I want to go back up to Jason High and his statement, sorry for your loss, God bless. Another brief story about Haley Wright Burns, our dear friend who passed away yesterday morning. This is Haley. I know you don't know her, but if you ever get to meet a woman like this, you never want her out of your life. Friends, girlfriend, wife, whatever, however it is that you retain this kind of personality, you need a Haley in your life. This chick, well, let me start. I'm just going to tell you a brief story here. One day, I woke up and my wife woke up and she had been out with friends earlier that night and got smoked. I mean, hammered, bombed out of her tree. She was very, very drunk. So when she woke up, she was very hungover. I mean, the classic hangover. Feel like shit, headache, bright lights hurt. You can't really talk very loud because that hurts. I'm talking classic hangover. And I'm sitting there kind of, nursing her back to health on the couch when you hear, and the first thing my wife says is, I don't want anybody here. I don't want to see anybody. I don't want to talk to anybody. You know what? Don't answer the door. Well, it was too late because I had already looked out the door window and there she was, Haley, from out of town, completely unannounced, like literally no warning whatsoever. I look over at my wife and I go, you're going to want to see this one. And I opened the door and Haley walked in and it was like my wife's hangover just disappeared. And she stayed with us for that whole weekend. And her and my wife just did all the friend stuff that they always used to do, because by that time she had moved away and we hadn't really seen her or been around her for like a year. And Jeannie had really missed her. This is the kind of person you want. Just knocks on your door after a year, no calls, no emails, no texts, no, hey, I'm coming over, just entertain me. Which I think she actually said that when she walked in the door. That's the hailstorm that everybody actually needs. All right, that's the weather report. Welcome to part 2 of the news that you can use. Unless, of course, you live in Vancouver, in which case this is not news you can use. It's news you don't want to hear. Vancouver mayor's Bitcoin investment proposal has been blocked by the city and provincial law. Sam Reynolds, CoinDesk. Vancouver Mayor Ken Sims' plan to invest city reserves into Bitcoin is not permitted under the Vancouver Charter and British Columbia's Municipal Finance Authority Act. The briefing, released ahead of a March council meeting, recommends closing a 2024 motion to make Vancouver a Bitcoin-friendly city after staff determined the plan violates municipal investment rules embedded in the city's charter. Staff wrote they, quote, conclusively determined that under the Vancouver Charter, Bitcoin is not an allowable investment asset for the city. The conclusion reflects the highly restrictive framework governing how Canadian municipalities can invest public funds. Section 201 of the Vancouver Charter allows the city to invest idle funds only in a very, very narrow set of instruments such as federal or provincial government securities, government guaranteed bonds, municipal debt, bank guaranteed investments, credit union deposits, and certain pooled investment vehicles. British Columbia's Municipal Finance Authority Act reinforces that restriction. Municipal investment pools are limited to conservative assets such as government bonds, municipal securities, bank deposits, and highly rated commercial paper. The law defines eligible securities as bonds, debentures, deposit certificates, and promissory notes, reflecting a framework built around fixed income and cash equivalents. Stocks, commodities, and cryptocurrencies are not included. A narrower question remains unresolved: whether Vancouver could still pursue the softer branding goal embedded in the motion by accepting Bitcoin for taxes or fees, provided that the cryptocurrency is immediately converted into Canadian dollars, which are worthless. I added that. While the charter regulates how city funds are invested, it does not necessarily govern how payments are processed. So Vancouver uncovers a little thorn, which is now in the side of Vancouver's mayor. At this point, I don't care. You're either going to stack sats or you're going to have fun staying poor. That goes for individuals, cities, counties, states, and countries. So HFSP, I guess. Let's run over to Pakistan. Their parliament passes Virtual Assets Act, formalizing crypto regulatory authority. Brian Danga for the bloc. Pakistan's parliament passed the Virtual Assets Act 2026, converting the Pakistan Virtual Assets Regulatory Authority into a permanent federal body with the power to license and supervise crypto service providers. The legislation, which takes effect upon publication in the official Gazette, introduces criminal penalties for unlicensed operations, including fines of up to 50 million PKR, which is their fiat currency. That's $179,000 US, and imprisonment of up to 5 years. Unauthorized virtual asset offerings or promotional activities will receive a separate penalty of $89,000 US and 3 years imprisonment. The law also authorizes the federal body to establish special virtual asset zones designed to attract blockchain companies, though specific zones have not been designated. The federal body was initially constituted through a presidential ordinance in July 2025. The new law replaces that temporary measure with a statutory framework, granting the authority powers to acquire property, enter contracts, and enforce compliance. PVARA, the federal body, is now responsible for issuing, suspending, and revoking licenses for virtual asset service providers, which includes exchanges, custodians, and firms facilitating token issuance. Quote, the legislation also equips the authority with powers to address money laundering, terrorist financing, and other illicit activities associated with virtual assets, bringing Pakistan's regulatory approach in line with international standards, the federal body wrote in a post on X. Their first invited global crypto firms to apply for licenses in September of 2025, targeting an estimated 40 million local users. That's a lot of people. The regulator stipulated that applicants must already be recognized by a major jurisdiction such as the United States, the European Union, or Singapore. Firms must also meet minimum capital requirements and ensure their services comply with Sharia law under the guidance of a committee of Islamic finance scholars. HTX in December 2025 became one of the first exchanges to receive a no objection certificate from PVARA, initiating the formal licensing process, and Binance received a similar preliminary clearance that same month. Both clearances allow the exchanges to register with Pakistan's Financial Monitoring Unit for anti-money laundering compliance while preparing full license applications, though they are not yet permitted to operate. All right. Okay. Sounds good to me. By the way, is Pakistan still, at war with the nation's second most populous nation, or the world's second most populous nation? Because, that doesn't seem, we don't seem to be talking much about the fact that India declared war on Pakistan or something. I have heard nothing about it. It's like Iran is just taking all of the headlines. So it just seems odd that in the midst of their kerfuffle with a huge superpower themselves, I mean, they're not a superpower, but dude, well over 1 billion people in India. And they are having an issue, and all of a sudden, hey, it's business as usual in Pakistan. Let's do this crypto thing. Solo Satoshi launches Bitaxe Turbo Touch, an open source touchscreen Bitcoin miner. Micah Zimmerman from You Know Who Bitcoin Magazine. A small Texas mining hardware company is releasing what it says is the most powerful open source touchscreen Bitcoin miner currently available to home users. Houston-based Solo Satoshi announced the launch of Bitaxe Turbo Touch, a compact device designed for hobbyists and home miners that delivers more than double the hash rate of other touchscreen miners in the category. You're looking at about 2.15 terahashes per second on this little rig. The product builds on the open source Bitaxe GT801 platform. It's powered by dual BM1370 ASIC chips. Those are the same chips used in the industrial scale Bitmain Antminer S21 Pro. The chips allow the device to achieve efficiency of roughly 18 joules per terahash, according to the company. And during testing, the device reportedly reached over 3 terahashes per second when overclocked. The miner includes 4.3-inch capacitive touchscreen that displays real-time network and mining data. 8 rotating displays show metrics like hash rate, performance, price, current block height, yada, yada, yada. Network information is pooled from mempool.space, a widely used blockchain data explorer. Matt Howard, founder and executive of Solo Satoshi, said that the company prioritized transparency when building the device. Quote, "We built this because we believe the tools people use to interact with Bitcoin should be fully verifiable," Howard said in a statement. Quote, "Every line of code between the ASIC chips and the pixels on the touchscreen is open source," end quote. The miner runs 2 open source firmware layers, Axe OS, which is the mining operations, and BAP GT Touch, which powers the touchscreen. Both software repositories, along with hardware schematics and board layouts, are publicly available under an open source hardware license. The device consumes about 43 watts of power and produces roughly 35 decibels of noise, placing it closer to the sound level of a quiet room than traditional industrial mining rigs, which scream like the engine of a 747, I might add. At typical U.S. residential electricity rates, Solo estimates the miner would cost about $3.70 a month to operate. The Bitaxe Turbo Touch connects through a 2.4 gigahertz Wi-Fi module using an ESP32S3 microcontroller. Blah, 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 blah. Let's see. Hold on, because it goes into a lot of technical details that you don't need. Oh, here's the price. That's the detail you need. The company says its model delivers significantly lower cost per terahash, about $151 per terahash compared to the $299 per terahash for the Brains device. The launch also highlights a growing niche within the Bitcoin mining industry focused on open source hardware. You'll have to do the math to get a price of the device because they don't actually say what it costs. So at let's say it's a little over 2 terahashes, then you're looking at somewhere around $600 to $700, maybe $750. It's a little pricey, but it is what it is. I want to see a lot more decentralization in mining, and really the best way to do that is for somebody to have just a single small miner in their house. If for no other reason to say, I'm supporting the Bitcoin network, it would be a big help. Okay, last up for the day. In the United States, the IRS has proposed mandatory electronic delivery of tax forms for digital assets. Oh, joy. atlas21.com. The U.S. Internal Revenue Service has proposed new rules to make the electronic delivery of tax forms mandatory for exchange users. The proposal amends current regulations that require exchanges to provide paper copies of Form 1099/DA, or digital assets, upon user request. Form 1099-DA is a tax document used to record cryptocurrency transactions carried out through centralized exchanges or brokers. The proposed new rules would eliminate the requirement to provide the form in paper format and would allow brokers to, quote, terminate their relationship with existing clients who refuse electronic delivery. This is bizarre. The proposal would also prohibit users from retroactively revoking their consent to receive forms in digital format. If adopted, the new rule would take effect on January 1st of the calendar year following the IRS's publication of the final regulations. The IRS requires all broker-dealers, that is, platforms that provide crypto services to users like exchanges, to report user proceeds for each transaction and to provide Form 1099-DA detailing their transaction history for tax purposes. The agency has specified reporting requirements for brokers. Quote, brokers required to file these returns must include the customer's identifying information such as name and taxpayer identification number and other relevant information, including the gross proceeds of the transaction. According to the National Cryptocurrency Association, a crypto industry advocate group, 1 in 5 Americans holds digital assets in the U.S., totaling approximately 55 million individuals. That's a lot. That's a lot. Wow, that's way more than I expected. Okay. So this just seems a little bit bizarre to me. And I think I know what's going on here is that they don't even want you to have the chance to just not send you the document, or rather, they don't want to take the chance that you don't send them the paper document, the paper printed out 1099-DA. They want to make sure that you never see a paper copy of that at all, so that they know you can't even forge it, like just completely change the data, which is a dumb thing to do anyway. And I think what they're really getting at here is that they don't even really want you to be the one that sends them the information. They want to make sure that you do send the information to them, but they've already got a copy of that shit directly from the exchanges. That's what's probably coming next, if it's not already in this rule change, is that all 1099-DAs from all exchanges doing business with U.S. citizens, that's why it would be a 1099-DA, so U.S. citizen is implied in 1099-DA, go directly to the IRS. And basically, we just also get a copy of that. So, but to deplatform somebody for, to say so do you still want your paper copy? And I tick yes. And then they send me an email 15 minutes later saying, you've been off-boarded, as the word is. You've been off-boarded because you want paper. It's nanny state level shit is what it is. And it's going to get worse. It's always been getting worse. It's never gotten any better. I don't see why anybody would expect that it would at this point. And this is just sort of like one of the nails in the coffin for that. I don't know. Act accordingly. And I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.